Welcome to Stifel's Sightlines podcast, focusing each week on a topic or two important to investors. Well, greetings and welcome to the Sightlines podcast. This is Michael O'Keefe, Stifel's Chief Investment Officer. In this episode, I want to get into some of the learnings from what we call our Blueprint Conference. This is an annual conference at Stifel where we come together with industry leaders and experts to discuss the environment, to discuss what's going on in the economy, the markets, but also talk about best practices when it comes to serving our clients. And in this conference, I had the good fortune to interact in front of folks a little bit with some industry leaders, including a group of folks from Stifel. And so I essentially want to walk through very briefly some of the individuals I was interacting with, some of the learnings from those individuals, and what that might mean in terms of the environment, number one, and number two, sort of think of it as the direction of the industry. So let me start with our own Chief Washington Policy Strategist, Brian Gardner. So basically think of that as a foundational discussion where we got into what's happening in Washington and shifts in policy. There's so much going on, of course, but there was a bit of a focus on tariffs and trade deals, noting, of course, the pause in terms of U.S.-China tariffs, like a rollback a little bit, and that in some ways creates sort of the opportunity for there to be an increased focus on the tax bill. So, there's a view, of course, that we'll see much, if not all, of the 2017 cuts extended, but then possibly some other tax breaks. And again, more to come on that, but Brian was very insightful when it comes to what's going on in D.C. Now that sends a sort of sets a foundation, maybe is a better way to say it, for the economy. So I was able to talk to First Trust Chief Economist Brian Whisbury, and kind of a combination of topics. One was the economy. And honestly, when it comes to the economy, I think he's expecting things to slow down a little bit, but hold up. And even when it comes to things like deficits and debt, that we as a sort of an overall system should be able to handle things. But he also was signaling some caution when it comes to the markets. We'll talk a little bit more about that in a minute. But the punchline is he sees, basic valuations as being a little bit heavy, a little bit high, and that could be maybe not so much a force to bring markets down significantly, but a bit of a headwind to strong positive returns going forward. Also heard from our own chief economist, Lindsay Piegza, Dr. Lindsay Piegza, who did recently lower her forecast, but maintains a view that we'll have positive economic growth, so not overly worried about a recession, but is mindful that both sides of the Fed's dual mandate, so think stable prices, i.e. keep inflation under check, and then maximize employment, i.e. what's the labor market look like? Both sides are starting to experience just a little bit of risk, a little bit of pressure. Now, we've seen decent inflation prints, but there's all around the industry a view that inflation is going to kick back up. Lindsay's very much in that camp. And yet at the same time, an economic slowing, an increase in unemployment, for example, and that in her view, the Fed will really only have room to cut one or two times here through the balance of 2025. And even though we discussed it as a low probability scenario, she, like we, in fact, over recent weeks, has been focused on the low probability but high impact scenario of stagflation, meaning a slowing economy and or recession coupled with higher inflation. And so that's something that's in focus for her. Now, shifting a little bit to the markets, let's start with fixed income in a few ways. The first is a nice conversation, with Franklin Templeton fixed income CIO, Sonal Desai, who I would just describe as is excited as a fixed income investment expert to be embracing yield opportunities. So she talked about traditional investment grade taxable bonds. She talked about muni bonds as offering a good sort of taxable equivalent yield. She talked about the opportunities selectively to take a little bit more risk, think high yield bonds, and a brief comment from her on private market debt, which I'll come back to. But She also was one of the speakers that basically reinforced that the idea of quote unquote 60/40, so traditional investments in equities and bonds, it's a strategy that is once again sort of working and appealing given the higher yields that we're seeing in the bond market. Now, the others that got into fixed income was, for example, Capital Group CEO Mike Gitland, who basically explained that private markets will be a source of capital for businesses, and that includes debt. So think in terms of sort of capabilities being brought to market that will include a blend of public debt and private debt. And so Mike Gitland from Capital Group was chatting about that. And then later in the program, BlackRock's head of the portfolio management group, Rich Kushel, so this is the group that oversees all of active management at BlackRock, kind of an important role. He did reinforce that idea that private debt is an opportunity for investors, and these sort of capabilities coming out to blend private and public debt are productive for investors. But as is often the case with BlackRock being very strategic in terms of looking at where things are going, Rich also brought to the table this idea that we need as a world and as a country improved infrastructure, and that by the nature of that, that's going to create investment opportunities for individuals. So again, more to come. That's sort of a strategic comment from him. Now, turning to equities for a quick minute, I mentioned Brian Westbury's caution. Another interesting discussion was really around that concept of risk. So another participant in some of these conversations was the chief executive officer and chief investment officer. He holds both titles of Confluence, Mark Keller. Mark, I thought, interestingly, sort of reframed the concept of risk. He said, hey, volatility includes both upside moves, downside moves, and upside moves. So maybe it's better to focus on the downside. And then more importantly, I think, the difference between just sort of, volatility where the stock could easily go back up or the investment could go back up, and the concept of what he thinks of as a permanent loss of capital. And, what that allows investors to focus on, or sort of guides them to, is think more high quality, well-run businesses, high quality, financially stable, et cetera. And that, you, in some ways, you sort of layer that on top of whatever other work you're doing to really make a point of trying to avoid, quote unquote, permanent loss of capital. So I thought that was a pretty interesting discussion. Now, in the equity space, another thing we talked a bit about were some of the more thematic areas where people are looking at investing and looking out to the future. And of course, artificial intelligence was in focus. Stifel co-head of U.S. equity research, Tom Roderick, really got into sort of the various dimensions of how businesses ultimately are either utilizing artificial intelligence or providing those services, and reflected that, like most, it's a key area of focus when it comes to investing. And of course, there's those direct applications of artificial intelligence, but also the things that surround it. Think of it as the infrastructure around AI, like power and that infrastructure, as well as things like cybersecurity. And finally, I had a conversation with CIO Matt Hogan from Bitwise, who discussed basically sort of innovation really around blockchain. So that technology, which again opens up all kinds of opportunities when it comes to investing. So that was a really enjoyable conversation. And again, the spirit of all this is, hey, these individuals are looking forward. So Matt was really talking about the sort of foundational support of blockchain, going back to folks, as I mentioned, like Rich Kushel, who's really talking about where we're headed when it comes to infrastructure, or Tom Roderick talking about where we're headed for artificial intelligence. So all of this wraps together into what was a very enjoyable set of conversations. I feel very fortunate to have the opportunity to be involved in this and to engage with these industry leaders, really with the eye towards looking at where we are and where we're headed, to sort of help all of us think about it from an investing perspective, both in terms of risk and opportunity. So, hey, listen, thanks so much for listening to this session, and we'll catch you on the next one. Thanks again for listening to Stifel's Sightlines. Be sure to subscribe wherever you're listening to automatically receive each week's podcast in your feed.